JPMorgan CEO warns US economy is weakening.
With much more weakness than we thought we had in the job market.
What is your definition, or description rather, of what the Trump economy is today?
Dead in the water. If you look out there in the labor market, no one's getting hired.
Hi everyone, JJ here. Welcome back. Well, is the US economy currently experiencing a slow death? It does seem to be tanking. We're going to look at some videos today. I'm going to react to these. The news that's just come out, in particular, jobs report. Jobs being revised way down, massively down. Not for a long time has this happened. And we will see some comment on this. Now, this channel started as a investment channel way back. I do want to do more economics and investment type of videos. Let's get back into it. So this one here, job growth revised way down, nearly 1 million, over 900,000. So let's see the announcement and what they say about it, and then I'll comment on it along the way. Let's get into it.
We're getting those payroll revisions. Let's go to Steve Leisman. Steve, what do you see?
I see the biggest revision we've had. I go back 25 years here. This may be the biggest revision ever, Sarah.
Biggest revision ever. So this is not during the Trump administration too. This overlaps going back further than that.
It's 911,000 payroll growth from April of 2024 through March of 2025.
So April of last year, 2024 to this year. So these revisions happen, but this is kind of a shock how massive it is, which does indicate that the US economy may be weakening or tanking severely. We'll have to see what happens. There is a big lag in this data, but maybe if you're in the US, you've noticed things around in terms of jobs, in terms of the economy that isn't showing up yet, where you're going, hey, this is not as good as what they're saying. Is that the case? Let me know that if you think that is. I've done one video recently about the Las Vegas economy tanking, people really noticing it. And, the thought was that was because of the tariffs and Trump's talk about basically you could be arrested and detained at the border even if you're a tourist, which has happened that's scaring people off. But maybe there's more to it than that. Maybe there's something else to that the economy is actually weakening. Let's continue.
Is 911,000 less than previously reported. What has happened now to the month over month, or the monthly growth rate has gone from what we thought was 147,000 a month to now just 70,000 a month. So 1.7 million jobs is now 847,000 jobs created over that period. So over that time period, payrolls were quite a bit weaker. Remember, this is the period ending 5 months ago. This is the annual benchmark revisions that's done every year. This is a preliminary number. Right now, it's suggesting much weaker payroll growth.
So a few months ago, so what has happened since then? That's a big question. And what will the Fed do? Will they lower rates? There's talk about that. Stick with me here and we'll see some talk about what's going to happen from here. So the stock market kind of actually liked it. Well, liked it for this day because, you can think that interest rates might go down and that tends to help stocks. It all can depend on what other data's there.
And now you have to plug in you have to start thinking about what does this say about today? In other words, this data is 5 months old. We won't know until the final revisions in February which month each of the weakness belongs to, but we do know a bit about which industries it belongs to.
You can see from different years here. What's interesting is this is so bad. It's like it was in 2009 after the great financial crisis. If you're old enough to remember that, and it was bad. It was such a massive recession, and they're going to show that in a second.
880,000 from the private sector. The biggest revision came from trade, transportation, and utilities of 226,000, 126,000 off in retail. Leisure and hospitality down 176,000. Professional business services down 158,000. Oh, not a lot in private education and health services, which was a big. You can see the recent revisions there. The second biggest revision that I have, Sarah, in my records is 2009 in the wake of the great financial crisis. And what had happened in that situation was some of the modeling was wrong. Some of the birth, death of businesses was wrong. This may be the case right now. We might have come into this year.
That was a bad year, 2009. The bottom of the stock market happened in March 2009. So it really had played out. Massive recession. We can see it there. 902,000. So this is as big as that. One of the worst times in living memory, really. And it's as bad as that if these figures are to be believed.
With much more weakness than we thought we had in the job market. It was okay. It seemed to be like the unemployment rate remained relatively stable. So whatever we were doing was okay to keep the unemployment rate, a separate survey, relatively low, but we were not creating as many jobs as we thought. And I know that some Fed officials, Chris Waller among them, think this is part of a broader story of weakness in the job market that should cause the Federal Reserve to cut. And we'll see what happens now. But certainly the market was primed for 325 basis point cuts this year.
The market primed for rate cuts, as he said. So this, why the market maybe jumped on the news, because the market likes interest rates cuts. Okay, let's move to this. JPMorgan CEO warns U.S. economy is weakening. So people do look to him to talk about the economy, one of the most massive banks in the world, really. And let's see what he's got to say.
This really looks like the market's apparently betting that an interest rate cut is even more likely after those revised numbers provided by the Bureau of Labor Statistics.
If the economy's weakening, then they will cut rates. I mean, that's one of the reasons that they put them up. They were so low for so long since, 2009, the financial crisis, really that whole time interest rates were sort of going down. They tried to raise them. That's the way that they were near zero is emergency rates. So they wanted to get them up, and they have gone up, but now, that means there's room to cut them, and Trump really wants them to be cut. He talks about Jay Powell being too late. So a lot of signs pointing to interest rate cuts being more than expected, but we'll have to see what other data comes out.
Statistics show that the economy added almost 1 million fewer jobs than were initially estimated for the year ending in March.
There's so many.
Now, we are living in Trump's economy. We're living under Trump's tariff regime. As you saw, the Trump administration yet again blaming Joe Biden and Jerome Powell. Trump has, of course, threatened to fire Powell because the Fed has yet to cut interest rates. He hasn't followed through on that threat, though, but he did fire the head of the Bureau of Labor Statistics last month after a disappointing July jobs report. Economists looking at those numbers don't see a conspiracy, though. They see a warning. Today, the JPMorgan CEO, Jamie Dimon, looked at those same numbers that the White House gets, and he saw it this way.
The economy's weakening. Whether that is on the way to recession or just weakening, I don't know, and that just confirms what we already thought, kind of.
And I know
that's a big revision. They're still spending money. It's a little bit different depending what income set they're coming from. They still have jobs. Now, you just gave a big number, so consumers tend to react to that. So the consumers weaken, confidence weaken, corporate profit is still up. And there's a lot of different factors in the economy right now. It's hard to figure out what it all means.
Yep, so it is hard. It's very complicated, as he said. And he was talking about other data there as well. So he did know, he sort of said it adds to it, and it seems to be weakening. He has been wrong before. He said that a hurricane is coming, and it never happened. So these people can be wrong, even somebody that's the head of a massive bank. So here, let's finally look at this one. Former CBO director says Trump's economy is dead in the water. I'm interested to see what he says here. Let's get into it.
Further discuss the job revisions that we just talked about with Kelly with Douglas Holt-Eakin. He currently serves as the president of the conservative advocacy group, American Action Forum. Prior to this, he was the director of domestic policy and economic policy for John McCain's presidential campaign. He was also director of the Congressional Budget Office and chief economist for President George W. Bush's Council of Economic Advisors. Jobs revisions, it's an annual process.
Yep.
Number seems kind of big, though, 911,000.
Kind of big.
0.6% of the entire U.S. labor market. The historical standard is 0.2%. Mm-hmm. How much of a deal is this, and what does it tell us that we didn't already know?
So it is a big deal because, 0.6 miss is a big miss for the BLS and should be something you pay attention to.
Does that mean the Biden economy in its last year was worse than it looked?
Certainly that, half the jobs being created that they thought.
Weren't there, yeah.
They just weren't there. And then one of the things that's interesting about it is that the unemployment rate is what it is. We had low unemployment, so we were miscounting the jobs, but we were also miscounting the job openings. I mean, things were filled up more than people thought.
Mm-hmm. What is your definition, or description rather, of what the Trump economy is today?
Dead in the water.
By that you mean?
If you look out there in the labor market, no one's getting hired. We don't have mass layoffs. No one's getting fired. It's just stalled.
Things are frozen.
Stalled. Absolutely. There's some bad parts, like manufacturing is in open decline. We're down almost 40,000 jobs this year. The private sector in the past 4 months, outside of healthcare, has not really shown any job growth. So that's a very flat labor market.
Okay, so dead in the water, I mean stalled by that, and we'll have to see what happens from here. As I said, I'm going to do more videos about the economy, about financial matters. So if you're interested in that, stay tuned for that. But what do you think of all this? What do you think is happening out there in the economy on the ground? All of these figures are lagging, like 3 months or more behind. So it's people on the ground knowing what's going on before the data comes up, really. So let me know if you're in the US, what you are seeing out there. I'd be really interested to know. And right now, I'm going to put a related video on screen. Do go and see that if you want to. And also a subscribe link. As always, do subscribe if you want to get more of these kinds of videos from me in the very near future. Thanks for watching this one, and I'll see you in the next one.